what companies' tech IPOs are you watching that are coming up that are actually good buys?
Well, King Digital might be one, Alibaba, possibly Square. It's really interesting with King Digital. Their multiple is very low, and they're profitable, so the value looks pretty good on the surface.
But King has a game, Candy Crush, which contributes like 78% of its revenue. How is that safe?
Right. Well, it's interesting. That's a good point. Well taken, no doubt about it. But remember, their relative price multiple is very low. When Twitter went out, you remember that one, they were about 50 times sales in a multiple. This company's 2.7 times. So I think the market is adjusting that. So I still think it's a good company if they can broaden their product line.
Okay, what about Square? This is a company that primarily focuses on swipe technology. Now there's all this talk about chip and pin, about more secure technology. Chip and pin is used in the rest of the world, so Square's going to have a lot of difficulty getting beyond the United States.
I think so. Well, that's a dog with the same fleas. That company is probably not profitable. They've got good sales growth. The valuation is the big flea there, Emily. We see it over and over again over the past year. Companies going out too early or way in advance of what they've actually performed in the market.
So are you saying investors should or shouldn't invest if Square goes public?
Well, here's the thing. Look, here's my thing, as you know. There's a checklist, and it's a basic one, and it makes sense to everyone. Is the company growing its revenue really well? Okay, check or no check. Is it profitable? Is there cash flow? What's the valuation like? What's the brand like? You look at all those together, and then you say, okay, now I can deep dive. But if it doesn't make those basic cuts, it makes me very concerned. By the way, not necessarily in a bull market where we all look smart, including me, because everyone wins. The average return for IPO tech companies in 2013 was 62%. We all look great. But the real issue is when the market goes down, and it always does, what happens to those companies then? Remember, the average bull market in the U.S. is about 3.8 years. We're into the 5th year of growth. So these companies that don't have strong fundamentals, they explode when the market goes down, and it doesn't stay up forever.
What about Alibaba? Do you have concerns about the fact that it's based in China, the fact that, you know, we don't necessarily have the same kind of transparency, and there are challenges dealing with the Chinese government?
Yeah, great question. Again, they meet all the basic points on, is this company pretty strong? They're growing very well, they're profitable, they've got cash flow. Now remember, they'll be subject to review and debate as to the strength of their financials, as to the quality of the financials. But on the surface, it looks like a pretty good company, although the value is probably going to be very high.
And how are you looking at Twitter right now? Twitter, Facebook, LinkedIn.
Yeah, right. Well, we can't take those all together. You know how I feel about Twitter. Twitter, to me, is still way overvalued. I like the fact that it looks like they're turning the corner in cash flow, but the valuation of Twitter is astronomical. It's unbelievably unprecedented. For example, when they went out and they went public, they were about 45, I think, to 50 times sales. When Google went out, you know that company, they were 15 times sales. When Microsoft went out, they were 5 times sales. So the value with Twitter, it's a slam dunk. It's very high. Now, maybe they'll prove me wrong in 2 or 3 years and they'll catch up to the value, but you're still buying it at a very high multiple.